reporting income and expenses. So tax smart strategies optimize sound tax strategies and apply them throughout the entire financial planning process. This will help you accelerate your wealth accumulation and dramatically increase your chances of reaching point X, financial independence. Now, normally when we talk about taxes, most people stop listening, but what I'm telling you is that taxes are in fact a very important subject, and the reason is a lot of the money we make ends up going in one form of taxes or another. So you're going to have a lot of choices to make when running your dental practice. I could either do this in the most tax efficient manner and keep more of the hard-earned money I earned, or I could do it in the least tax efficient manner and keep giving money to the government that's not required by law. So when it comes to small businesses, dental practices, and so on, one of the first decisions you have to make as a dentist, through the help of your CPA, is what method of accounting will I be using? There are two methods of accounting. One is called the cash method, and the other is called the accrual method. So on the cash method of accounting, you basically recognize income when you receive it, when you get paid. You also get to deduct your business expenses when you actually pay for those expenses. Pretty simple. The accrual method of accounting is much different. What the accrual method of accounting says, you recognize income when you earn it. Whether or not you received it, as soon as you've completed that treatment, even if your patient didn't pay you yet, you still have to recognize it as income. Same is true with your business expenses. You get to deduct them even if you didn't pay for them yet, as long as you incurred them. Okay, so an example would be your December rent was due December 15th. You didn't pay till January 15th. You still get to deduct it in the current year because you were obligated to pay it in the current year. So when it comes to dental practices, the choice you want to make here is definitely the cash method of accounting. Large publicly traded companies have no choice. They have to be on the accrual method. Dental practices could be on a cash method. Now, we already said earlier, no one in this room wants to pay double taxation, right? No one wants to pay taxes twice. How many of you would want to pay taxes on money you never even received? If you're on an accrual basis, that's exactly what could happen. A simple example is, end of the year, let's say you're an insurance-heavy practice. At the end of the year, if the insurance companies owe you $100,000, guess what? On an accrual method, you have to pick up that $100,000 in the year you earned it. Even if you don't get that money until February or March, you're still paying it in the current year. So just make sure, if you're not on the cash method of accounting, you want to make sure you convert to cash method. All right, so now in terms of reporting your income and expenses, in the world of taxation, there are W-2s that we could receive. W-2s are received by employees. So if you own your own practice and you're paying yourself a salary, you're going to issue a W-2 to yourself, as well as all of your employees. If you're self-employed, you're going to get a 1099. 1099 means you're self-employed, either a sole proprietorship, it could be a partnership, corporation, it doesn't matter, but bottom line, you get issued a 1099, no taxes come out of that. W-2, all the taxes are coming out. If you're a W-2 employee, you report all of your income on your tax return from your W-2. When you go to itemize your deductions, those go on a Schedule A. The problem is that the rules of the game, if you're self-employed versus if you're an employee, the rules of the game of the IRS are completely different. So let's just say hypothetically, you're a dentist and you work for someone, and this year out of your own pocket, you paid your own medical insurance, you paid your own malpractice insurance, you paid to attend this course out of your own pocket. You're a W-2 employee. How much of that is tax deductible to you? Zero, not a penny of it. Unreimbursed employee business expenses are not tax deductible. You get no tax break for it. If you're self-employed, you pay for all those costs through your business, and now they become 100% tax deductible. Now, just as a side note, if you are in fact an employee right now and not self-employed, one of the things you want to try to negotiate with your employer is that part of your compensation package, you want to get them to give you some sort of allowance to pay for things that you're paying for out of pocket. This way, at least you're getting to pay for those in pre-tax dollars, not after-tax dollars. Okay, so these things are very big distinctions. And throughout this lecture, I'm going to show you the big difference between employee versus independent contractor, the differences in those two scenarios. So being self-employed, is it for everybody? Answer is no. I've met many dentists that, after meeting with them, talking with them, I realized they don't have everything it takes to be self-employed. And what I mean by that, you have to wear multiple hats. You have to have a fairly good outgoing personality. You have to be willing to deal with marketing issues, managing people. The list goes on and on. So if you have those entrepreneurial skills, by all means, jump into it, go into practice for yourself. But again, one of the big advantages of being self-employed are the huge amount of tax breaks that you'll be entitled to by being self-employed. Okay, so speaking of self-employed, how many of you in the room work as a freelance? So you work from one office to another as an independent contractor? Okay, a few of you. What about those of you that own your own practice? Do you pay anyone as an independent contractor? Okay, so few of you do. So right now, the important thing that we have to talk about is whether someone is in fact an employee or an independent contractor. The IRS right now, they've been cracking down on this subject for many years, but now under the Biden administration, he's already stated through their various means, they're going to be cracking down on this big time. And why is that? Because if you're really an employee and you're getting paid as an independent contractor, that independent contractor who's really an employee disguised as an independent contractor, he or she is going to be able to take a huge amount of deductions that otherwise they wouldn't be able to take. So the government's losing major tax revenues because of that. So you need to be certain that if you pay someone as an independent contractor, they actually are. So there's two big laws that we follow in this area. One's called common law test. This is the most common with the IRS for many years. Basically, look at a behavioral control. Who's controlling your schedule? Who's controlling what you do? Is it you, the independent contractor, or the person that hired you? If the person who hired you is controlling that, chances are you're really an employee. And also financial control. Who has financial control? Is it you, the dentist, paying someone, or the person receiving the money as an independent contractor? And then also the relationship. So there are basically 20 criteria the IRS looks at, as well as the Department of Labor. You don't have to meet all of these 20 criteria to be categorized as an independent contractor, but you have to meet most of them. And again, if you were an employee or an independent contractor, you had a choice of one or the other, you're probably going to want to be an independent contractor because of all the tax breaks, but you don't want to put yourself at risk unless you're following these rules. So major crackdown is in place right now for misclassification. A lot of dentists don't realize this, but if you intentionally misclassify somebody as an independent contractor because you don't want to be responsible to give them health benefits, you want to pay their Social Security tax and all their other taxes, not only could you get serious fines and penalties, but if they feel it's part of a tax evasion scheme, you could actually go to jail and lose your license over this. So you want to make sure that if you're paying someone as an independent contractor, they truly are. A new test that many states are using now is the ABC test, which is even stricter than the old rules that we used to follow. This is basically an outline of the ABC test. Not going to go through it all in detail. And then to make things even more confusing, depending on what state you live in, your local state Department of Labor, some of them will use common law tests, some of them will use the ABC test, some of them use a combination of both. It's really a real big mess. But the one thing I know for sure is right now the IRS is moving towards not using the common law test, but instead the ABC test. So, bottom line here, when in doubt, you should pay anybody you're paying as an employee, not an independent contractor. If you want to be very careful about the situation, and let me give you another example. Let's say you're a general dentist and you hire 2 general dentists to come work for you. Chances are those general dentists are not independent contractors because they do exactly the same type of work that you do in your practice. If you bring in a specialist and that specialist works in multiple locations, not just your office, that to me sounds more like an independent contractor. So you want to be very careful about that. And again, although this doesn't guarantee anything, if you're paying an independent contractor and you're making the check to their name directly, that's also a big red flag. I've been through many Department of Labor audits. I've been through payroll audits over the years. The IRS agent, Department of Labor auditor, they look through your QuickBooks records. They're not looking to see who you wrote out checks to, if they're made out to the name of a business for this subject. They're just looking at everyone you made checks out to individuals. So if you do have independent contractors right now that you're paying, and you're paying them in their personal name, I'm going to encourage you to encourage them to create their own separate legal entity, and hopefully by January 1st, when you start paying them, you'll pay their legal entity and not them, the individual dentist. Again, there's no guarantee that that is going to save the day, but in all the years I've been doing this, if the check's going to an individual name, that's when there's a higher chance you're going to have a problem. Okay? So this is all about protecting yourself. And by the way, on the other side of that equation, I believe you said you get paid as an independent contractor. This is also something you would need to do to protect yourself. The reason for this is that if the IRS or Department of Labor comes in and does that audit, they're going to reclassify you as an employee. Then the employer is going to owe a huge amount of fines, penalties, interest, have to redo all their payroll forms, and then all the deductions the independent contractor took as an independent contractor when they were really not an employee, all those deductions disappear, and you're going to see multiple interest and penalties there as well. So long story short, just alerting you to the fact that be very careful with this topic and do whatever you can to protect yourself on both ends of this test.